The Microsoft era of OpenAI exclusivity is over, and GPT-5.5 just landed on AWS. Anthropic stood next to JPMorgan's Jamie Dimon and declared war on Wall Street. A courtroom in Oakland is auditing whether the promises that launched the AI industry were ever real, and CoreWeave just reported a $99 billion backlog, and the stock fell anyway. This is the Daily Alpha for May 8, 2026. 5 stories. Every angle that matters to your portfolio. Let's get into it. OpenAI just made GPT-5 instant, the default model for every ChatGPT user on the planet, and it cuts hallucinations in high-stakes domains by 52%. That number matters more than any benchmark. Hallucination rate is the single metric that determines whether AI is actually deployable in finance, law, and medicine, the highest-value enterprise segments on Earth. Every point of reduction expands the addressable market. GPT-5.5 Instant is live for all ChatGPT users and available in the API as Chat Latest. Plus and Pro users are getting personalization drawn from past conversations, uploaded files, and connected Gmail accounts, with memory source controls rolling out to all models. OpenAI also quietly launched GPT-5.5 Cyber in limited preview, a specialized variant available only to vetted cybersecurity defenders, protecting critical infrastructure. For investors, the most important line in this story is from Sam Altman. The API business is now growing faster than ChatGPT itself. That means enterprise adoption, not consumer growth, is the primary revenue driver. And with GPT 5.5 now on AWS Bedrock, that revenue flows across clouds, not just through Microsoft Azure. Watch for Gmail. Personalization hitting mobile. That is the stickiness mechanism that locks users into the OpenAI ecosystem long-term. Dario Amodei stood next to JPMorgan CEO Jamie Dimon and announced Anthropic's full-scale assault on Wall Street, and the details are more aggressive than the headline. Anthropic is not selling API access to financial firms. It is embedding itself as operating infrastructure. The two CEOs unveiled 10 pre-built AI agents for banks and insurers, pitch books, audit statements, credit memos, the high-stakes, high-liability documents that define financial services work. The model handling this is Claude Opus 4.7, built specifically for financial workflows. Partners already signed: Goldman Sachs, Visa, Citi, and AIG. Full Microsoft 365 integration is also live. Behind all of this sits an 80 times increase in annualized revenue in Q1, against an internal forecast of 10 times. Anthropic also formed a new enterprise AI services vehicle with Blackstone, Hellman, and Friedman, and Goldman Sachs, a consulting meets technology model designed to implement Claude-based solutions for mid-sized enterprises at scale. A fall IPO is the stated direction. For investors, this is a direct structural threat to AI service practices at McKinsey, Accenture, and Deloitte, firms that have been building AI practices for 2 years without a frontier model of their own. Watch for Goldman Sachs, disclosing Claude usage metrics publicly. That is the enterprise credibility signal that will move the IPO story. In a single day this week, the cloud AI infrastructure map was redrawn. Microsoft and OpenAI amended their partnership to end Azure exclusivity. Within 24 hours, Amazon launched GPT 5.5 and Codex on AWS Bedrock. The multi-cloud AI era has officially begun. This is the most consequential cloud distribution shift since GPT-4 launched. Microsoft built a $13 billion investment thesis on being OpenAI's exclusive commercial partner. That exclusive is gone. The new terms: Microsoft retains a non-exclusive license through 2032, stops receiving revenue share from OpenAI, and existing payment streams continue through 2030. Total deal value is approximately $38 billion, AWS immediately deployed OpenAI models in limited preview on Bedrock, alongside a new Amazon Bedrock Managed Agents platform powered by OpenAI for enterprise workflows. For investors, this redistributes OpenAI's revenue potential across AWS, Azure, and Google Cloud rather than concentrating it at Microsoft. Azure's AI differentiation just narrowed. AWS gains an immediate upsell motion on its existing enterprise base. Google Cloud already has Anthropic. The frontier model landscape is now genuinely multi-cloud, and that changes the hyperscaler competition dynamics for the rest of 2026. Watch for AWS announcing Bedrock general availability for OpenAI models. The limited preview to GA timeline signals how fast enterprise adoption can accelerate. The Musk versus OpenAI trial added a new witness this week, who changes the texture of the case entirely. Shivon Zilis, former OpenAI board member, Neuralink executive, and mother of 4 of Elon Musk's children. Her testimony cut directly against Musk's central claim. Zilis said that OpenAI's corporate structure was debated, quote, ad nauseum, and that for-profit options were always part of those discussions. That directly contradicts Musk's assertion that he was deceived into funding a non-profit that secretly intended to go for profit all along. OpenAI President Greg Brockman separately rebutted Musk's account of the founding commitments, saying he never made nor heard the promises Musk describes. And then came the most jarring admission of the trial. Musk confirmed under oath that XAI used distillation from OpenAI models to train Grok. He called it standard industry practice. Musk's core legal claim is simply stated: you cannot steal a charity. If the court agrees even partially, OpenAI's equity structure faces legal jeopardy, and Microsoft's $13 billion position sits in the exposure zone. The $852 billion valuation is priced for continued execution, not litigation-driven restructuring. One additional detail: the jury verdict will be advisory only. Judge Gonzalez-Rogers makes the final call. Watch for any interim evidentiary ruling in Musk's favor. That signals the judge may be sympathetic to the charitable trust argument. CoreWeave beat revenue estimates by $110 million in Q1, and the stock fell anyway. That reaction tells you everything about where investor expectations have moved for AI infrastructure. Q1 revenue was $2.008 billion against a $1.97 billion estimate. Revenue backlog surged from $66.8 billion at year-end to $99.4 billion, a $32 billion increase in a single quarter. That backlog number is the most important leading indicator in AI infrastructure. It represents locked-in future revenue from some of the most creditworthy customers in tech. Meta at $21 billion through 2032, Jane Street at $6 billion, OpenAI at $22.4 billion total, and now Anthropic. The market sold off because Q2 guidance of $2.45 to $2.6 billion fell short of the $2.7 billion consensus, and because the company raised its CapEx floor to $31 billion due to rising component costs. CoreWeave is adding GPU capacity faster than it can monetize it. Total contracted power now exceeds 3.5 gigawatts, with plans to reach 5 gigawatts by 2030. The CEO's most pointed comment: NVIDIA must expand AI capacity or risk losing customers to AMD. If that threat becomes real, GPU pricing changes, and CoreWeave's long-term margin story changes with it. Watch for CoreWeave's gross margin as NVIDIA Rubin architecture contracts start landing. That is where the unit economics thesis gets confirmed or challenged. Today, the AI infrastructure map got redrawn. OpenAI went multi-cloud. Anthropic embedded itself inside Wall Street. CoreWeave printed a $99 billion backlog and couldn't hold its gains. And a courtroom in Oakland kept peeling back the founding mythology of the most valuable sector in the world. The capital is moving fast, and the signals are loud. Stay ahead of them. Subscribe to the Daily Alpha and follow us at @the Daily Alpha wherever you track the markets. This is the Daily Alpha.